I do believe that anytime the market is sold off on tariff, trade fears or alike, it's been a buying opportunity. So for me to see the market sell off now during a little bit of a slow week heading into a 3-day weekend, probably somewhat predictable. But I think you have to be buyer of this marketplace because it's still not breaking down. This is a fraction of what we've seen the bulls put in the cash register, so to speak.
Do you agree with that? The market was already a little bit nervous about what's happening in emerging markets and pulling back from triple record highs yesterday.
Yeah, I think Steve is dead on right. I mean, look, no matter what metric you look at, whether you look at hotel occupancy, at flight bookings, at consumer confidence, at unemployment, they're all screaming great economy, and there's no sense that that's going to slow down anytime soon. So this is more likely a very short-term hiccup. And let's face it, a 0.5% sell-off isn't exactly something dramatic. I mean, let's forget about the points for a moment and look at, percentages here. So to us, yes, it's absolutely an opportunity to buy. I do think that you're going to continue to see performance diversion in different sectors, and so you don't want to necessarily just buy the S&P. You want to be a little bit more discriminant there. But yeah, this is nothing.
Would you go so far as to buy industrials, which is the first group that gets hit when these trade headlines
Not
cross?
Quite yet, no. So we own them. We're not going to sell them. But if we're deploying new cash, there's other areas that we prefer: consumer discretionary and cyclical shares and staples. We like much more. Financials are attractive here. So.
Shannon, what's your top sector pick for the rest of the year?
I think we're still very positive on technology. I think we're trying to be more thoughtful about where we're taking our positions in technology, thinking about what type of semi-exposure we have, for instance. We're very optimistic on healthcare. I think that following the elections, we've certain firms and investors have shied away from healthcare. There's still a very strong demographic tailwind for healthcare, and so we're excited there. I think financials, we'd love to be more excited about financials, and so what we're doing is sort of thinking about ways that we can position our financials exposure so that we're less exposed to the yield curve, and in that we're becoming a bit more bullish on our financial position.
Rick, what's your level of contagion risk out there from emerging markets?
I think that it's always going to be something to pay attention to, especially considering we've just kind of gone through one in early to mid-August. It seems to have subsided with respect to huge volatility in the markets. But we all know that underneath the surface, many of these issues aren't resolved from a political or geopolitical balance sheet, central bank, think Turkey. They're still there. The issue is when and how much they affect markets. And I think in that regard, we've pretty much repriced some of the credit and liability issues there. It doesn't mean there's not going to be any more shocks moving forward. But if the long-term view, or I should say actually the next 3 to 5 week view of the dollar index is any indication, it certainly looks as though that market is going to act a lot more like it did in June and July than it did in August with respect to its current level, up just shy of 3% on the year. And insofar as China, these headlines are always going to be magnified in front of a 3-day holiday weekend, to be sure. But I do think that if Canada really gets a little closer into the done camp, that may change the dynamic of how some of those headlines affect the marketplace moving forward.
Steve, can the equity market shrug off the dollar if it does rally?
Yeah, I think it can. I don't know. I think it's a testament to where this market is going that the dollar isn't screaming higher with everything that we've seen. So what I'm looking at now is, does this give Chairman Powell a little bit of cover? Because everyone was worried about President Trump's comments sort of leading Chairman Powell, and he's not going to be influenced by the president. But now when you start to see emerging markets and we start to see the dollar effect or rates, does Chairman Powell get a little bit of cover now to say, okay, let me skip one cycle here because we're already at neutral?
The market is still pricing in September. Still
pricing it in, but I think that if once you hear the chairman get a little bit more of a softer, more dovish tone, the market responds with rallying. We popped above that 2,900 level. It's almost like you're trying to keep a ball underneath water with this marketplace because the market wants to scream higher. We're heading into year end. When we talked about weakness in the housing market, these are numbers, lumber numbers, interest rate numbers that these housing data marks are attributing to from months ago. It's a lagging effect.
You're not worried about the housing?
I'm not worried. I think you're looking backwards versus looking forward. There's a lot of people who have to play catch up. And this, what we've seen today, makes me more convicted that the United States is the best market to have your money versus putting it in and taking a stab at Turkey, taking a stab at other marketplaces right now.
Oliver, final thought. Everyone's bullish. What could we be missing? What's the biggest risk?
Well, I think the biggest risk is that there's an international blow-up that you can't predict. I mean, look, there's the midterm elections that are coming up pretty quickly. I mean, that's a couple of months away. You've got the tariff issue. What if Mexico and Canada fall apart at the last minute? Those type of things. But those are long-tail risks that are virtually impossible to protect against or very expensive to protect against. So I wouldn't worry about it. And
is everyone bullish? I mean, on this panel, yes. But I'm just wondering, is there a level of euphoria that has accompanied these record highs that makes you as an investor nervous?
Well, I'm always nervous, but that's my personality. But I think generally speaking, investors are very optimistic and bullish, and they see that translated into it. The cash levels that are sitting on the sidelines, while meaningful, haven't materially gone up at all. As a matter of fact, they've been coming down. And so, yeah, I think there's almost a fear of missing out from investors, and that's pushing them in. And that's why we are where we are.
So maybe FOMO, not euphoria.
You buy breakouts, you don't sell breakouts. This is a breakout. I don't think you want to be caught getting short going into the tail end of the year with the bullishness that we're seeing.
And the fourth quarter tends to be the best performing quarter for equities, so we're right there.
Though September is always a tricky month.